All right, problem 3. What we're dealing with here is a carryback, which when we have operating losses, there are certain types of companies that allow for, or the IRS allows for, the ability to carry back the losses to years that you had profits in. And the reason that you do that is because $1 today is worth more than $1 tomorrow. And that's why you would carry it back. And that's what's going on here. And the question becomes, how far can you carry it back? 2 years. And what's the ordering of the carry back? You go to the earliest year first, and then you work your way back. So in this case, what they did was they lost $110,000. So year 5, they lost $110,000. All right. Now, what I'm going to do is I'm going to first go to year 3, because that's the furthest I can go back, and take that $100,000 first. Now, another tricky thing about these questions is that if it's not this type of business and you are carrying it forward, then what you have to do is you can only take 90% of the taxable income and use this as a deduction against it. You can't take all of it, but for this type of business you can. And that's what we're going to do, is when we do this journal entry, what we're going to do is we're going to take the we're going to go back 2 years, which is the $100,000, and the value of it in terms of the return that I'm going to get is what I paid, and so $25,000 here. And then the remainder is going to come from year 4, and that's $10,000 times its tax rate, which is 30%, which equals $3,000. So the total amount that I'm going to get back is $28,000. And we're going to call that tax receivable, and it's for $28,000. And then the other part of that is going to be the income tax expense. We're going to reduce tax expense for that. $28,000. All right, and what we would see at the bottom portion of this income statement is we would see, okay, let's take a look at this last part, which is what would the income statement look like in this question for year 5. They lost 110, and so that's our starting point, 110. We determined that our tax benefit is 28,000, and that's going to give us a net loss of 92. There's the journal entry and the ending of that, or that income statement. All right, that'll do it.